In this presentation, we will process payroll with vision insurance employee paid before taxes and compare and contrast that to payroll that we had before that, which didn't have the vision insurance and did have, in the case of the prior payroll, dental insurance, which was employee paid but after taxes. So that's going to be the primary difference between the dental insurance and the vision insurance, them being much the same in all other regards, the difference being the before taxes or after taxes component. We will enter this information into QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Online. Here we are in our S-Corp paid payroll file. We're going to go down to the Workers tab. In the Workers tab, we have our employee Anthony Moore. We're then going to run the payroll, so we'll process the running payroll up top. We're going to select the payroll period, and so for us, we have the payroll period now being the 5th payroll period. So we started in January, we're now in May. Notice that's the last payroll period we can do in 2019. So you may have different options within your time period depending on when you're processing this. If you're still running in 2019, you may have the ability to run more payroll in 2019 in the example problem. If you're in 2020 or some future time period or a following year, then of course you'll have similar restrictions. There will typically be restrictions on how far forward you can go in a practice problem and how far back we can go. So we're going to choose 5/1 to 5/31. We're going to be paying it at the end of the year, at the end of that month, which is 5/31. So pay period for the month, monthly pay, we're paying it at the end of that month. We'll then enter our same hours. So it's going to be the same hours for the month and 1 hour of overtime. This is going to be the same hours we've entered into prior payroll, therefore getting the same gross pay calculation of $4,062.50. If we want to see detail, as we do, we're going to select the pencil over to the side. And then here we have the calculation, the 161 times the 25, 4,025, and the 1 times the 37.5, giving us the 37.5. Gross pay, we've seen that before. It's the same, even with our new item, which is related to eye insurance or vision insurance. Then we're going to go down to the employee taxes. Employee taxes, and we'll see the federal income tax is now the 145.10. Now this could be different than the prior federal income tax because of the way we entered the vision insurance, which is different than the way we entered the dental insurance. And that's going to be a big difference that if we can qualify for, that's what we want to do. We'll take a look at that in more detail, the comparison between those two checks in a following presentation. Then we have the Social Security and Medicare, and we'll notice that it is slightly different as well. And let's just take a look at the calculation. These we can calculate and see it right here because it's the 4062.5 times a rate, which is times 0.062 or 6.2% for the employee portion. That would give us Social Security of 241.87, and we have Social Security of 250. It's a little less. Why? Because now the vision is also being included in the calculation here, which is great. So that means that the vision, if we do this again, 4062.5 minus 25 paid for the vision by the employee, which we'll see in a second, is this amount. And then we're going to say that times the 0.062, and that gives us the 250. So that's the difference here that we have. Same with the Medicare. If we take the 4062.5 times the Medicare rate, 1.045, whoops, let's do that again, times the Medicare 0.0145, then we're going to say that that's going to be 58.90, and we have 58.54, a little different, and that's because we're getting the deduction here as well. So it's 4062.5 minus 25 for the vision insurance times 0.0145, and that's what we get here. So we could see that impact, we could see the effect, the difference between the vision insurance now being deducted not only for FIT, but for Social Security and Medicare, which is nice. And then we won't go into the California specifically. We're focusing on the federal here. These are the amounts paid by the employee taken out of the employee check for taxes. Then we have the employee deductions. These are what's taken out of the employee amount for their benefit. The 401k plan, not the employer part, but the employee part, the amount coming out of the check to get to net pay. And then the dental provider, this is going to be the dental insurance. that we did last time, and the new item, the eye provider, the eye insurance or the vision insurance, which is going to be the $25. The $25 is coming out of the gross pay, but it's also having an impact on the federal taxes, Social Security, and Medicare taxes, as opposed to the dental provider because of the different options we chose, which is also coming out of the net pay, but not changing the federal income tax, Social Security, and Medicare. And then we have the employer taxes, these being paid over and above. So we have the FUTA is now 0. Doesn't have anything to do with the I addition. It's because they hit the cap. And then we have the Social Security and Medicare matching the Social Security and Medicare, the same calculations we saw up top. And then we have the California taxes, which we're not focusing in on here. And then the company paid contributions, which just are the 401k, the employer portion. In other words, the new item, the vision, is not employer contribution. It's not being paid over and above what's being reported as gross pay, but is part of gross pay and is reducing gross pay to get to the net pay. So we're going to say okay down below. We're going to say that this is the pay period. That looks good. So this looks good up top. So we're going to go ahead and preview this. And then within the preview, we want to submit. Everything looks good here. So we'll submit the payroll. Submitting payroll, we're going to say that the check number is 1005 this time. And then print the pay stub. So this is the pay stub we would have to provide to the employee. We see the check amount now, $3,310.74, and our information for the employee information, just the amount to get to the net check, is really what we need on the pay stub. So that includes the total pay, the gross paycheck, minus the taxes, minus the deduction to get to the net pay. Again, note that the employer portion isn't included in here, and neither are the contributions by the employer. So the employer taxes paid, Social Security, Medicare, and the employer contributions to, say, the 401k, not reported here because it's not included in the calculation to get to the net check. And then we have the amount of taxes, the 503.63, broken out over here, federal income tax, Social Security, Medicare, and then California taxes, which we're not focusing in on here, whatever the state taxes are in the state you are working in. And then the deductions taken out, 401k, just the employee portion, the dental and the eye, which are voluntary by the employee. They wanted to participate in them, and therefore we're taking this out of their check in accordance with that agreement and paying it to the provider for dental insurance and eye insurance. That's being pulled out here, and that's going to get us to, of course, the net pay. For more accounting information and accounting courses, visit our website at accountinginstruction.info.